I'm Diana Murray. I am with ASAP Accounting and Payroll. We are your host today, and I've been with ASAP just about 11 years, and I am in charge of a lot of different things at ASAP. You've probably seen me in some form or fashion, either through our newsletter or emails, or training support, you name it. I wear a lot of hats. And I'm really excited to introduce our guest speaker today. We have Clifford Hansen with Insurance of the San Juans. And Clifford and ASAP have a very good relationship and customer service philosophy in the way we approach our services. We're also in very similar markets in Colorado. We're based out of Telluride, and we also, both of us, have offices in Durango, Montrose, and Aspen. And he also has got an office in Nantucket. Lucky him. So with that, I will actually go ahead and turn it over to Clifford here.
Thank you so much for having me here today. Also joining us on the line is Mary Frazer. She's in our Durango office, and Mary does a lot of work with me on workers' compensation insurance. But our presentation today is about managing your premium, your workers' comp premium, and payroll reporting, which is a factor of that for workers' compensation. The first slide today. The reality of workers' comp insurance is it's one of the only policies where you can control or have a positive effect on your company's annual premium. The premiums are literally based on the class or type of work that you and your employees are performing on a day-to-day basis, the amount of payroll that's being allocated to those payroll classes, and then a few other things that we're going to review here today. But one of the most important practices for you as a company is to breed a culture of safety and responsibility in your workplace. Employees, it is proven and shown that employees have more respect for an environment designed with their best interests in mind. And a safe workplace is definitely a more profitable one. One where there's no injuries, insurance costs are lower because of that. Those all have an extremely positive effect on your bottom line. And those injuries are bad for morale. They're expensive in the short term and in the long term. So the reality is that your safety policy and related safe practices need to be implemented with management, and then led by example, and then practice from the top down. Let's see. The development of workers' comp premium. There's a couple of exceptions or exemptions from the premium. Owners, officers, stockholders all have the option to be excluded from the classification, from the premium. If they are included, they're immediately included at the highest risk payroll class. But to exclude them, a lot of people opt out. But if you opt out of workers' comp insurance for your company and something happens, there is no compensation for the owner. I just want to make that clear because it definitely is a question that's come up along the way. Bona fide subcontractors are also excluded, and that means an independent contractor who's carrying their own workers' comp insurance and their own general liability insurance. Sole proprietorships do have the option of excluding or exempting themselves from workers' comp, but if there is an accident on your job and they haven't exempted, there could be a loophole by which you're responsible for it. Classifying workers, scopes codes. So if you're a general contractor and you have a mason and a framer and a trim carpenter and a laborer, those are all classified separately. If you have the same employee doing different jobs, they are automatically classified at the highest class code. In an audit, you can, if you are keeping payroll records, if you're a landscaper, for instance, and are doing some sprinkler work, plumbing is a very high class code. General labor for a landscape company is not as high. It's about half, it seems. And so if you're keeping payroll records that break those two payroll classes out throughout the year, you can allocate payrolls accordingly. If you don't have those payrolls classified, the audit will definitely, you'll get penalized for it on both the general liability and on the workers' comp.
And that's something easy for us to help set up.
Yeah.
If that is of an issue to somebody and hadn't thought of it.
Yeah.
We can jump in there and set up class tracking that way from a labor standpoint for the payroll reporting.
Yeah.
Just real quick to interject.
Yeah, and that's definitely part of what we've been going back and forth on is that, classifying your employees and laborers and office employees correctly with ASAP for payroll purposes will simplify your life and mitigate audit experiences, positive and negative. I mean, the last thing I want to do as a guy who sells insurance is hand someone an audit that is adding 20% to your annual premium. The goal is to just let you know where you are standing on a monthly basis when possible through these payroll reporting practices. But moving back to how the premium is calculated, there's a few different discounts available. Designated medical provider. This literally is a list that you provide or you give us or we provide on the application for your workers' comp insurance. It says you're using the Telluride Medical Center, the Norwood Medical Center, the Ridgeway Mountain Medical Center. Montrose is not included in their preferred provider list of Montrose Hospital, but Grand Junction is, and in all likelihood, in a bad scenario, that would be the next place that someone is taken to. There's also a couple of doctor's offices in Delta, and aside from the hospital in Montrose that are qualified. Cost containment certification, we'll get into this a little bit deeper, but this is basically, we help you attain this certification. It's basically makes your company OSHA compliant. It takes about a year to get it done, and the resulting credit for getting cost contained is 5% on your annual premium. Safety group credit, that's another 4%. There used to be 100 and some odd safety groups in the state of Colorado. There's 9 left, and there's only 1 left on the Western Slope, and we're a member of it. It's a great program. It's, being a member of that gives you a 4% discount, and you qualify for additional dividends through that safety group. The underwriter has control over credits and debits based on their level of comfort with your company. I've had some companies change ownership structure, and they've debited, credits, or debited the premium, increasing it because of accidents over the previous year. If we're familiar enough with your company, we can talk them down on the debit on the policy, and we're in the process of doing that for a large client now. I mean, their interpretation of what's going on, the reality of what's happening are 2 different things. I'll get into that a little bit more, but if you're implementing a safety program and holding regular meetings and have drug screening and physical checkups for employees that are doing hard labor, more manual type labor, there are ways to credit your policy further for programs that you've implemented as an employer. Avoiding negative factors. So late payments, it happens. Everybody, sometimes we see the pink slip before we see the first payment invoice. And but the underwriters, it's an insurance company. I mean, to say things are fitting in a box would be the understatement.
Yeah.
And if they see a couple of missed or late payments, they get a little uncomfortable. So you want to try and just make those premium payments ASAP. No pun intended.
Yeah.
And if ASAP's doing it for you, then then it shouldn't be an issue. Failure to comply with underwriting requests. Sometimes they'll send out letters and ask that you put if you had a visit by a cost controller out to your job site or workplace, and they want labor posters or signs on things indicating hazards or potential hazards, just do them, and then let your workers' comp company know that you've done them. It's a simple email or fax or and that will that'll just let them know that you're on it too. Absence of a safety program or return to work, modified duty, those are all factors that play into it too. And then implementing a deductible. This, to me, is one of the most important things. A lot of companies never have losses or, have minimal losses under $1,000. And if you put a deductible on your policy and you eat the first $1,000, which is basically an emergency room visit for some stitches and small type things, those losses never hit your NCCI report. NCCI is the company that monitors and determines rate for, or experience mod rather, for all companies with Pinnacle or workers' comp policies. They took a look at your losses, what's been paid, the frequency, so on and so forth. And if you're implementing a deductible in your policy and taking the hit on the first $1,000 or $2,500 or $5,000, depending on what you're comfortable with, it has the long-term effect is positive. But we'll go into that also in a couple of slides. Cost control, so cost containment. Mary, are you on there?
Yes, I am, and I apologize. I don't know why my video isn't working.
Okay.
Can you hear me? Yeah.
Yeah, we can hear you.
Okay.
Cost control measures,
Okay.
cost containment certification.
Right. So there are basically 6 steps to obtain cost containment. And something important to note is that the cost containment certification is actually obtained through the state. The advantage to that is that once a company has their cost containment certification, the discount that they receive can be applied to any policy that they have. So it's not carrier specific. If someone's with Pinnacle and they switch their work comp over to Travelers, for example, they'll still have that certification. Part of the 6 steps is that the state wants to see that there are safety measures in place, an employee safety manual, safety group meetings happening, a person that is in charge of the safety meetings, and then some additional steps in the event of accidents, such as a formal return to work program and modified work duty. It's very important for people who are injured to get back to work as quickly as possible, even if they can't do to the full extent what they were doing before. Accident investigation reports also, they essentially want to see that if accidents are happening, that they're being investigated and they're being mitigated in the future so that they don't happen again. The safety plan has to be in place for 12 months. So 1 year of active safety meetings, having all of the paperwork in place is what is required by the state to apply for the certification. Once the certification is obtained, there's a 5% discount. And then every few years, the state will contact the insured and inform them that they need to recertify, which, unlike the initial steps to do this, is a very simple process. And it entails filling out some paperwork and getting them up to date on claims. And then the other important thing to note with the cost containment certification, aside from the financial advantages, is that it's actually been proven whenever there is a formal safety program in place that employees behave more responsibly and are more accountable for their actions. That'll head it back over to you, Clifford.
Thank you, Mary. One thing, just going back to that slide, if you're working with us, we will help you create your safety program. We will provide you with safety meetings and provide you with any updates on labor law, provide you with labor law posters for your office. You know, people solicit companies on a regular basis for these for the labor law posters for your office. And I was telling Mark this recently, but one of the people that we work with in our Montrose office actually paid for a group of posters to be sent to us like a year or 2 ago. And I said, well, you realize we're giving this away for free. So, I mean, you know,
that's great.
The tactics to get you to buy these labor law posters.
We're right there with you. We sell them from someone as well.
Yeah.
But if you've got that as an included benefit, that's even better.
Yeah, we'll just send them to you and you know, email them to you on a monthly basis. We'll email them to you on an introductory basis, and if there's any changes to the labor laws that result in addendums being issued, we'll send those to you as they come out. So you know, it's a great program. It's an easy thing to administer from our side, and all you have to do is basically click and open the email when it comes in. Risk management and cost control. Understanding your experience mod. Going back to deductibles. So the average, I'm going to skip through around in the slide, but the average E-mod is a 1.00. If you haven't had any losses and have been in business for a few years, your experience mod or E-mod will essentially start to drop. If you're experiencing losses on a semi or regular basis, your experience mod will increase. So someone with a 0.77 is, 23% less than average, and that is a really good experience mod. And a 1.77, there's problems. And so I've taken over some really large accounts that were, had a 170 mod or 180 mod. And after getting them cost contained and having the owner of the company, doing safety meetings on a bi-weekly basis, those numbers just popped into my mind when I was writing this presentation up. Their mod went from a 1.77 to a 7.7. So they're paying, let's say $10,000 in workers' comp premium. Their payroll has since doubled and they're paying $9,000 now. So it can have a huge effect on what you're paying in insurance.
How would, let's say I've been using Pinnacle for a dozen years,
Yeah.
Not through you, just signed up on their website, how would I go about finding out my E-mod factor, what it is? Is that something that I'd have to dig out of the policy, or where would you see that?
On your declarations page, there's a line item that says experience mod, and it'll show you, there's a bunch of credits and debits listed on the policy, the cost for the payroll, the cost for the policy, and then there's credits and debits for deductibles, experience, so on and so forth. And it's listed in that little 5 or 6 line area.
Might be easier for me just to contact you and have you do that.
Yeah. Thank you. That is what we do. I mean, if you send us a copy of your declarations page, we can take a look at it and help you figure out, what you can do almost immediately to have a positive effect on your premium. So safety program, new employee training, return to work, modified duty, accident reporting, all this stuff is part of what we would create for your safety program, safe practices. Deductibles, we will run it, Mary will get into this in a minute, but we have a program, we'll run a deductible, and it can show you if you've had a series of losses in the last 3 or 4 years and your premium's really high, we can show you what implementing a $500 to $10,000 deductible would be, how that would affect your premium. If you have a bunch of little losses, they are going to affect your premium more than one big loss because, it is insurance, crap happens, and that's why you have insurance. But if you have a bunch of little losses, what appear to be regular losses, those are the ones that are going to tax you. So, the low deductible, reducing the low frequency stuff is going to help you. And all these are factors that control your E-mod. The deductible, your being safety compliant, these are all just factors in controlling your experience.
Next slide.
Yes, sir. Mary, you want to do this one? Take care of this one?
Okay. So with claims in your E-mod, it's basically a giant math calculation. And what the Pinnacle or any work comp provider bases the E-mod on is that frequency breeds severity. And so it's a little counterintuitive, but what that means is that a smaller claim in the long term is going to cost a company more, and they're going to be penalized for it more heavily than one large claim. And the thought process behind that is that if there are a bunch of small injuries, for example, like stitches in the hand, then the Pinnacle views that as, well, it's just a matter of time before somebody loses a finger. So we're going to give a
They believe
huge heads up on this.
it's an unsafe work environment is what they're looking at. And that's what you're trying to show the company, Pinnacle, Travelers, whoever, that you have got a controlled work environment. Sorry to interrupt, Mary.
No, that's fine. And so that really brings us to the law of the small numbers, is that as a percentage, and we'll show some more visual examples of this, but $10,000 claims will have a greater impact than one $100,000 claim. And the $10,000 number is important because there is a thing called a split point that is in the calculation for the premium that you're being charged. And any claim that is under $16,500 is the one that will be weighted more heavily in that calculation and cost you more over time. So how do you control the frequency of these claims? And that is through having a safety culture and work environment where there is a safety program and there are specific items and programs in place to have a safe workplace. Another way to prevent this is to have a deductible, because like Clifford spoke about earlier, if you're picking up the first $500, for example, of a claim because you have a $500 deductible, then you are not being penalized for that first $500. So that won't go into that calculation that is ultimately going to cost you a bunch of money. Okay, next slide.
How much do the, if I could step in, Mary, this is Mark.
Sure.
Like a $500 claim.
Next slide.
Well, then I'll just be quiet.
Wait, is this, oh, it's actually, let's, the next two slides. Mary, you take this one too.
Okay.
But yeah.
If you'll get into it. I get you. Go ahead.
Yep, I will. So basically these next two slides are going to answer your question, Mark. We're here, it's basically a visual of exactly a specific example of the financial impact of the small claim situation. And this wording here, specific loss sensitivity detail, is just really a very elaborate way of saying this is how much a claim is going to cost you over time. So in this example, we have a $10,029 incurred loss. The limited adjusted loss, that's the same number. It doesn't have any different meaning. And as you can see, going into this situation, the company had a 0.826 experience mod, which in math terms, that means that they're paying about 17.4% less than their peers. And they're also getting a 17.4% discount on the premium. And I see that there's a question coming in.
Yeah, we had a question come in. I think I understand what she's trying to say here, but where can I find out the requirements for reporting an accident? For example, I had an employee slip on a wet floor at a client's office, and she had her wrist looked at by a doctor. She filed a claim with the building people, but I don't know if I also need to report the accident. How soon, how small of an injury needs to be reported, and what if I don't know if it's the building responsibility or my responsibility?
So,
well, that's a really good question, and I think that, oh, Clifford, do you want to take this, or?
Go ahead, I'll add to if we need to.
Okay, I think there's a couple of different things going on here. First of all, an injury should be reported as soon as possible, and all of the information to report an injury is available through Pinnacle's website. If you have a safety program, you will already have all of these documents because that is a requirement. So it would be very simple for you. And like Clifford said earlier, that's something that we can help you with. So the building part, that's a general liability issue with the building on having a wet floor, but her injury, as her being your employee, is one that needs to be filed immediately with the work comp provider.
And
And
even
then
if,
I think,
depending on, you know, what is happening with the claim, if the building is taking ownership of what happened, you just, even if the claim, you think it's going to be a small one, you just file it for record only. And then, you know, that way you're preserving your right to make the claim. And the same goes if you have a deductible and you have let's say you have $1,000 deductible and somebody goes in and it looks like the claim is going to be less than that, you still file the claim with your carrier for record only, because if that person's cut finger results in nerve damage or whatever it might be, you've got to, you know, you preserved your right for the claim, and any additional amount over the deductible that is going to be paid out will be taken care of at that point.
Is it typically 24 hours, kind of a 48?
No, I mean, you've got a little bit of time, but
Yeah.
there's no reason not to. I mean, we all are busy.
Yeah.
Just report it immediately.
Yeah.
You know.
they will start, basically the clock starts ticking on penalties through Pinnacle after 24 hours. And even though they can't plug that number into their actual calculation where they'll charge you, they can put that in another area on the premium calculation that's on people's declaration page that's called the subjective rating.
Yeah.
Where an underwriter is literally judging
A debit or
a
credit.
company based on their timeliness and accuracy in reporting injuries and audits and so on and so forth.
So it sounds like, just to clarify, that even if it was at her client's office and the building is has been contacted or is involved in some way, that she as the employer should still file a claim. Is that the correct?
Yes. Yeah, she's an outside the person is an outside salesperson. I would imagine they're covered as such. I think she said they're a virtual company. Is that correct?
Well, yes. So all of their meetings are at their clients' offices.
Yeah. So their employees are all outside salespeople. They should absolutely get just a claim filed.
And one follow-up question, which is probably a commonplace question too. If she hasn't filed the claim and it happened 2 weeks ago, should she still file?
Yeah. Yeah, she should file. I mean, in all likelihood, it'll be taken care of by the GL, the general liability carrier on the building, and the company that owns it, but you know, get it filed just in case.
Yeah, just one last thing to say on this slide is that what this is really showing us is that in dollars, a $10,000-ish claim over a 3-year period is actually costing the insured and a company $18,668. So it's really huge. So now we can go to the next slide. Thank you. This slide is showing us how smaller claims cost more over time. For example, a $500 claim has a 3-year premium cost of $932, and as a percentage, it's over almost 200% is what it ultimately ends up costing the insured. And if you look in the premium to loss ratio, the numbers get less as the loss amount on the far left-hand side goes up, which basically shows us that what we've been talking about, a larger claim ultimately costs less than the smaller claims. What this also shows us is how we can use a deductible to mitigate and minimize the cost of smaller claims. And of course, this is also a risk tolerance question with people and how much money they have on hand and how much you can shell out whenever an employee gets injured. Are you comfortable paying up to $5,000 out of pocket? If you can, then that's great, because ultimately it's going to save you money if there are smaller claims. And it will also reduce your premium because you get a deductible discount. And we actually have a program where we can analyze your losses, not only by dollar amount, but by body part, even day of the week. And we can help you determine what deductible would be the most appropriate based on your previous losses.
And where the losses are, if there's any frequency to them, you know, what is it lower backs? Is it elbows? Is it on Fridays at 4 o'clock? So there's a lot. It's amazing how in-depth it can get. But, in likelihood, we're talking about less frequent cases, but just modifying your existing policy to get the lowest premium that you can without putting you in a risky situation financially. So risk management, there's just a couple more slides. Coverage, I'm going to actually go back to this risk management beyond workers' comp and just go into how we can help. So we'll work with you to create and implement a safety program with your company, and we can provide the plans to you both in English and in Spanish. And
so the next slide.
The next slide, yeah. The experience mod analysis that Mary is just talking about, that is to take a look at your loss history, when the losses happened, where they happened, what type, how much they were, and then doing a deductible analysis for you with a cost projection that shows you what you would have been paying if you had a deductible in place, and then what you will pay moving forward, assuming losses of similar types moving forward. Signing up to receive our monthly newsletter. Again, we'll provide you with employment law updates, toolbox safety talks in English and in Spanish, any industry info related to you, free labor law posters, updates on labor law, all the stuff that you really don't want to think about. That's our goal, is just to make you don't have to think about it. Is to provide you with all the stuff that you need for your workplace. Subcontractor template and contract review. So a lot of people are operating without subcontractor agreements, and it's things have definitely become more litigious in the last 10 years, which is having an effect on these contracts. Putting in a subcontractor agreement in place, I'm going through a substantial loss right now, where a home was almost finished and a valance fell on a water faucet, and the painter had filled the sink with cellophane to clean a brush and left it there overnight, and so this home flooded overnight, and it's a huge loss. And so there's subcontractor agreements have been in place with this contractor. The loss will be subrogation against the painter and the shade person who put the shade back on after it was painted. And I mean, $700,000 or $800,000. They're big real numbers. They are real numbers up here. So these subcontractor agreements and implementing them, it's so simple, and letting us help you. I mean, it's a plug and play agreement. The highlights that need to be changed on a subcontractor basis are easy to fill out. And then we'll help you verify your independent contractors. I've also been talking with Mark and Richard about putting in
coordinating that.
Yeah, putting some language in there so that your independent contractors are signing off on the fact that they cannot collect unemployment from you.
Well, mainly because the UI auditors just kind of, or we had the state unemployment auditors in the region tell us that the state has plans to audit every employer in the state of Colorado over the next 5 years. And so, they have a system of checking and flagging who gets picked, but we've seen a steady increase of audits, and basically anybody that is on your books that you pay as a contractor that has a first name, last name on their check, they're just automatically calling them.
And not an LLC.
And not an LLC, automatically calling them, or even a trade name or anything. So even if your person is we had outside bookkeepers that we're friendly with get reported as employees of a restaurant,
Wow.
for those kind of issues where they had 5-6 different clients, had a book of business, but because they were coming to the client's office to do the work, using the client's computers to do the QuickBooks work, then it was looked at upon as an employee relationship. But the main issue was the employee was paid as first name, last name, and didn't have a trade name set up or a business or an LLC of their own. And so you really wanted, from an unemployment perspective and a payroll tax perspective, there's other things that differ from some of these other insurance related contractor steps, but you kind of want to coordinate them all and put them all together in kind of
one buttoned up contract.
Yeah, and this may generate some Q&As. This is typically where we get them. We have one question. Will the carrier manage a claim for the insured employer even if the claim is paid for by the employer's deductible?
So that's a great question. I mean, so if a client has an employee has a cut finger and they go to the med center, the claim will be, the employee will get negotiated rates. You'll get the negotiated rates that Pinnacle has made with that provider. And so the cost of the procedure or whatever it is will be less, the visit will be less than if they just walked in there off the street. But there is no handling on a smaller claim like that.
I got you.
And
just
then
make sure we got all these questions.
we are an agent for Pinnacle, by the way. And we have a few other companies.
Yeah,
we work with.
The great thing about Clifford and working with him recently has been, because we had this pay-as-you-go, which we can get into at some point, and understanding what that means exactly for payroll purposes. But, Pinnacle they carry quite a bit. How much? I don't know.
Like 80%.
80%. So you write Pinnacle coverage, or you can compare against Travelers, anybody nationally.
Yeah, Liberty
as
Mutual.
Well.
Yeah.
And so it's kind of it's great for us to be working with Clifford now as opposed to people we worked with in the past, because he can cover anybody in the state of Colorado or nationally. Correct?
Yeah, we work in almost every state.
Yeah. We have another contractor. Can you read that?
If we have a subcontractor agreement signed, but the subcontractor doesn't have workers' comp, are we liable for their injuries? So they would have to sign an exclusion for the job related to for the specific job. Mary, do you have that?
Yeah, I'd like to take this one over if you don't mind.
Okay. Sure, yeah.
So there's a couple different things going on in here, and this is a huge confusing point that people have with is a person a subcontractor or are they an independent contractor? And in order to be an independent contractor, people need to meet a few criteria that specifically makes them a true independent contractor and not a real employee. So to get to the answer to this question, it would be if the subcontractor doesn't have work comp, well, does the subcontractor have employees? Is it the actual owner of the company who got hurt, or was it one of his employees? Technically, if it is a true independent contractor who's working as a subcontractor, meaning a one-man show or woman show, in Colorado, as we all know, they can reject work comp coverage. And so whether or not the employee has to pick up that coverage depends on, yes, a subcontractor agreement being signed, and then also if they have an independent contractor form signed and on file where that independent contractor says, I acknowledge that I am a real independent contractor and I don't carry work comp and I understand that I'm not covered if anything happens.
And that form is filed with the Department of Labor also.
Correct. But basically, the subcontractor agreement is something that's just going to cover an employer all the way around and make any subcontractor or independent contractor accountable for their own bad work or anything that would cause a claim, so that the GC or the prime or whoever it is who has the contract in place isn't held liable for something that they did not do wrong.
Okay. Feel free, good time Q&A, but we're going to keep going back and
just one more slide and then we'll go back to that
yep.
one. Payroll reporting. So we work with ASAP. Smart Pay is another third-party provider you would see an email from if you signed up for payroll reporting. And workers' comp, your workers' comp carrier to set you up on payroll reporting. ASAP submits your payroll report to SmartPay on a every payroll period. And then payroll numbers are submitted by class code for each employee to your insurance carrier. SmartPay uploads a report. The proper amount of premium is deducted from that pay period from your bank account directly. And in slower months, you pay less, and in busier months, you pay more. You notify ASAP of the class codes for your new hires, and that automatically, increases or decreases your payroll depending on the class code. Mitigate your costly and surprising year-end audits. I mean, I've been through some really big, people are having huge years. The economy has been on fire. And the last thing people are thinking about is insurance. Like, oh my God, my payroll's up. That's what they're thinking about. But
Yeah.
I need to report my payroll to my insurance agent. That's not on the front part of everybody's mind. So doing this, setting yourself up for payroll reporting, so Pinnacle has typically been more difficult to deal with in the past. They have upgraded their systems pretty substantially. And so we've set up several accounts with ASAP in the last few months on payroll reporting, and it's a monthly reporting instead of every payroll reporting with Pinnacle. But I can't make an argument not to do it. I mean, it's the best way to control what you're paying, and control your audits. And, if ASAP already has all that information, they can execute any payroll audit that you've got. I mean, we're all busy. I'm busy. I don't even like doing my own audits,
Yeah.
So if you've got someone in place that's familiar with all your, your payroll numbers, it's a simple process to go
Well,
through.
on the monthly reporting, we have two options, and I can cover it with anybody, or Laura or any of our account managers can as well. But there's two options for the reporting. We can give you a report or access to run a report, and you can log into Pinnacle directly and submit it. We still coordinate the class codes for you, and that they're getting attached for your new hires, no matter what. And then that workers' comp report will be an added report in their standard pack of reports that can be just quickly read, used, and submitted with each payroll, or you can run that report on all the payrolls in the month of May and then submit May's report that way. And that's how we do it. And then some people hand off that task to us to do if they don't want to handle it in-house themselves. So either way works, their bookkeeper or us or themselves. You can do it. We can set it up. If we're going to do it, there's a little extra fee, but if not, it's just something we can add and turn on and let you get that extra report. So we
did have a couple questions come in.
Okay.
I think some of them are relevant for where we're at. One, I have an employee who lives in Colorado Springs and drives to meetings in Denver. Does workers' comp come into play if there's an auto accident? At what point? From the time she leaves her home, client? So that's the gist of the question.
Well, there's a couple different things. Mary, I'm going to just answer the liability part of it, and then if you'd handle the comp. But if she's driving for the company, there's a potential, if she's causing the accident, a possible liability scenario, though. But from a workers' comp, Mary?
Well, this is one of those gray areas that it's actually really difficult to give a straight answer. And I hate to sound like an insurance carrier, but that's pretty much what they would say too. Because you have who's liable, the other people involved. And really at the end of the day, it would probably be something that would be negotiated between the general liability carrier or carriers, if there was another vehicle involved.
She's driving to meetings? Was that the question?
This is actually the same virtual company, and I think this is pretty commonplace in today's environment. A lot of us might work from home or work remotely or work virtually for companies, but when we get in our car and drive to the office or drive to the client's office, again, it kind of gets into that gray area. But a little bit of clarification from that perspective.
Yeah, I mean, company business is company business.
So if I send an employee if I send like but if we have a sales meeting and Tyler is driving a Montrose or Ridgeway in his own car,
yeah, it causes an accident.
is that company business?
Well, yeah, I mean,
Because he went to go meet a prospect in a.
Could absolutely be considered so. So, I mean, that's one thing to make sure is on your general liability policy to have hired non-owned auto insurance.
Hired
and non-owned auto.
And non-owned auto.
I mean, that is an important line of coverage for you. It's relatively inexpensive, considering what the coverage is, $1 million combined single limits. It usually erodes your general liability limit, but it would be very important to make sure you have that.
Okay.
And then from a workers' comp standpoint, I mean, Pinnacle technically covers your employees 24 hours a day. We live in Telluride, and I included myself on my workers' comp policy because I ski with clients. And I was like, well, if I'm skiing with a client,
I hadn't thought about that.
I'm absolutely going to try and claim it.
Well, and we were planning in Durango a bike tour with clients in the next year. So,
totally.
Okay.
I mean, so, and then the next one is in regards to subcontractors, how crucial is having a notary sign an exemption certificate? Mary?
I'm sorry, for some reason I'm not seeing this question. Can you read it to me again, please?
It was in regards to having a notary
sign a workers' comp exemption certificate. For the
it's
department.
Not necessary in the state of Colorado.
Which
is great because that relieves a huge pain factor in getting all of the right paperwork in place. So you can disregard that.
Now, and maybe this is something that's changed, and I'm just slowing us down here, but I promise I used to see it where it said on the Pinnacle website on their forms to have it notarized. Is that?
I was trying to visualize the form. I
haven't looked at it in quite a long time.
I don't think it's on there.
You're right.
There are applications that require notaries, but that's a rejection.
Hold on. Go ahead, Mary.
If we're talking about the same thing, you're right, Mark. It does say that it needs to be notarized. However, if you talk to an underwriter at Pinnacle or any of the people at Pinnacle, they'll tell you that in the state of Colorado, it is not necessary, but they just don't put that on the form.
So that sounds about right. So.
Yeah, exactly.
Make it complicated.
If you really want to know the easy way, you got to spend a lot of time figuring it out,
Well, that's a great tip, just knowing that today. So thank you.
My pleasure.
So just the going back to a couple slides ago. Sorry.
The risk management beyond this one right here.
Yeah, that's the one. So coverage for 21st century exposures. So I mean, we are a full service agency. We do everything really except for health and life. We insure airplanes, airports, houses, autos, umbrellas, commercial exposures, general liability, workers' comp, inland marine, builder's risk, project specific for commercial and residential exposures, wraps, everything, professional liability, pollution liability, EPLI. EPLI is becoming, and cyber liability have both become huge. I mean, I just was reading an article not too long ago where a hacker was sitting outside of a restaurant, and most restaurants have open networks, or an open guest network, and then their the business stuff is coded. It doesn't even matter. People were hacking into these networks and pulling card numbers off of credit card machines as cards are being swiped, and like hundreds of thousands of dollars being stolen. So cyber liability is it's a good hedge, and it's not very expensive. Employment practices liability. If we're creating your safety program for you, we regularly include articles on harassment and training topics on sexual harassment, which is clearly a big issue these days. If you have a sexual harassment issue in your workplace, your duty is to defend that you have trained your employees and management against sexual harassment. If you can't prove that you have not done it, then you haven't done it. The training topics we have sign-offs on them for managers and employees. I mean, this is little stuff that is huge. You know, I mean, all of a sudden you're caught trying to remember. It's easy to document. We send it out. We can tell you what date we sent it out on, and then you can check your records for.
So let me ask, so on these trainings that require some sort of, is it sending some paperwork for them to acknowledge receiving? Is it hosting a seminar?
We'll send you, what we have been doing is sending out an email with links in it, and it'll have management training topics, and then also safety meeting training topics. And so it'll be like a 2-minute, 3-paragraph safety training topic with a sign-in column on the other side of the page.
Gotcha.
And you just have it's dated, you put who the presenter was, and all the employees who are attending sign off on it.
Gotcha.
I mean, it is so easy to do. And again,
I was thinking more in terms of our HR software tools that we can help clients with as well, but this sounds a little different, which is great. So
I mean, literally, as I was reading through this, I wrote this with Mary over the last couple of days, and I didn't realize how redundant some of the most important things are. But just looking back on it, it's deductibles in your workers' comp policy, changing your safety culture, and having the management buy into your safety culture. That is a huge deal, because if you're not buying in, nobody else is either.
Mm-hmm.
Controlling your EMOD by controlling your deductible, putting in safety. I mean, all these things combined, it's super simple, and we can help you get it set up in like a day. It really is very easy. And then just opening the emails when you get them, for those safety topics and management training. And it's very simple. It's a very simple process.
Again, I'm Diana Murray with ASAP Accounting and Payroll, and I would like to thank Clifford and Mary from Insurance of the San Juans for joining us today. And thank you all so much for your participation. Great questions, and again, lots of things to follow up on. And thank you so much. Have a great day.